Now, the S&P 500 is rising today, driven by an increase in Alphabet shares. This positive movement came after a 4-day decline in the technology sector as investors return to the artificial intelligence market. They are betting that Nvidia's upcoming earnings report will alleviate concerns that AI stocks are overvalued and overhyped. My next guest is also projecting a strong quarter from the chip giant. Let's welcome Kim Forrest, Chief Investment Officer and founder at Bokeh Capital Partners. And Kim, thanks very much for joining us.
Oh, it's a pleasure to be here.
Now we're looking, I think you're going to see decent earnings from Nvidia. What can we expect the market to react to that?
Well, I think the cat's out of the bag. If you watch Taiwan Semiconductor, you can have a pretty good idea on how well or how poorly Nvidia did. Taiwan Semi is the maker of their chips, and as you might expect, the complicated chips allow Taiwan Semi to earn more, and earn more they did. So that's about a month ago, and we put that to bed. But what we're really looking now for from Nvidia to tell us if we should be really happy, kind of happy, or not at all happy, is to see what the bookings look like in the next 6 months. Now, I think we're too soon in the build out of AI, even now, to expect some kind of rapid fall. But I think that is every investor's secret fear, is that, Nvidia is going to have some kind of cliff that it falls off of. But I don't think anybody is really expecting for that to happen this quarter. So we're pretty sanguine with that. Although I think the whole AI trade has been the reason why the U.S. markets have been selling off. People are nervous about just what AI is going to look like in the future. There's a lot of debate about it.
And you're not totally sold on the LL, right? The large language.
No, I am not. And I come from this from a place of experience, not just thoughts. I was a software engineer working at a company that actually made the first software that you could use and not have to be a programmer to create neural networks. So while I think they're phenomenal, the large language models are great at understanding what people want, I'm not sure that currently we can make that leap to have them be thinking machines. There is a lot more that goes into thinking than just being able to do a little bit of pattern matching and statistical analysis, which is really what the large language models are doing.
And where would you see that would be a better direction?
Well, I really like the smaller models that are solving a shorter term or maybe just a smaller problem than, one model to rule them all if you're a Lord of the Rings fan, showing my true nerd self here, right? Anyhow, yeah, I mean, I like what Palantir does. Now, Palantir is extremely overpriced, but they are solving smaller problems with AI where it's well matched. And, you don't have to make this giant leap. So I like productivity enhancing problems being solved. And I'm just not sure what LLMs are really solving, so you can't figure out what is a fair price for accessing them either.
Now, for now, it doesn't seem like that's going to change and that direction's going to change. No. Any concerns about the bonds being issued from some of these big names?
Absolutely. And it hits at the heart of my problem. The OpenAI and other companies who don't necessarily have, they have great revenue, but it doesn't match their capital outflow needs, right? Or CapEx spending needs. And I think that is what the fear is in the bond holders. They're always very worried about how are we going to get paid back. And if we don't know what revenues are going to be or why people are going to access these models, then we can't really accurately reflect if those bonds are going to be paid back. So it's a huge problem. It's the beginning of a thought and maybe a conversation among all investors about what do these things solve and are they worth the money?
And I'm just going to change directions a little bit. I mean, tech is what everybody is talking about. We just saw the earnings over the last couple of days from Home Depot and Lowe's today, and that looks like some weakening consumer sentiment. Could that be a problem, a bigger problem possibly than tech, or is tech still the focus?
Well, I think tech is the focus, and if only for a reason of the reason of the math behind the index, right? Right now, I think Nvidia is 9%. 1 out of 500 stocks in the S&P 500 is about 8 or 9% of the index. That's crazy, right? I do think, though, over time, if the boil comes off of AI here, consumer sentiment and especially housing is a huge area of concern. And I think a lot of that can be cured. Well, some of it can be cured by lower interest rates, of course, but we have a bigger problem in hiring. I think, I hate to bring it up again, but a lot of companies are thinking perhaps they can use AI in the near future and they won't have to hire people. And maybe that they're jumping the gun a little bit on that. Let's not hire people quite yet. Again, that can be remedied easily by, companies turning to hiring people. But yeah, it's a tricky time here with, the highs of AI and then the lows of companies like Lowe's and Home Depot.
Okay, we're going to have to leave it there, but Kim, thanks very much for joining us.
Thank you.
Kim Forrest, the Chief Investment Officer and founder at Bokeh Capital Partners.